Good morning, everyone.
Good morning.
Morning.
Good morning.
Hope you guys had a
Good
wonderful
morning.
weekend and a good start of the week yesterday. So we're going to cover this topic this morning. We want to see how we can achieve making $100 per contract scalping or day trading. So the main goal is to use something we've discussed about previously. The previous day, if a stock rises above the previous day high, or if a stock drops below the previous day low. Okay, so what this tells us about a stock is that when a stock trades above the previous session's high, it can be a sign of a trend continuation or a reversal. Okay, so it can either be that stock wants to continue going up or it wants to pull back, because every time a stock hits a new high or a high level, or what we refer as a ceiling, we usually expect a pullback. So you can have these two things happening. Either you're getting either you're going to get a pullback, and after a pullback, if the pullback is shallow, then it means this stock wants to go back up. If the pullback is deep, then it means you'll be trading the pullback, and then if it rejects the previous low levels, you're riding it back up. So we want that advantage of knowing all the stocks that have broken above the previous day high or broken below the previous day low, and how we are going to trade them. So an example we'll look at some stocks from Friday, the ones that are broke above the previous day high. Okay, I'm gonna start with BA, and we are using that same. I couldn't find the indicator I gave you guys, so I found I didn't make it favorite, and I think I saved it in a different chart. I have no idea. So, Charity, what are you doing to my screen? So this is BA on Friday. So the previous day high was the level. So when the market opens, you will see the levels for the previous day. So BA opened above the previous day high, the 233, and then it went all the way to 230, almost 235. Now, don't be quick to jump into a play. You want to see, not unless it's a stock that will keep trending up, but if you're seeing it's having, especially if you're trading with the key levels, like the way we knew BA was supposed to go to 235, you wait, rather than chasing this. If you are not in the play from the previous day, let's say you had a swing here and you're taking profit, okay? So you want to see all the stocks that broke the previous day high, how are they going to be a viable play? Okay, so you wait for the pullback, and most of the time you will see the stock pulling back to the previous day high or the previous day close or the previous day open. So how do we take advantage of this? If you see a stock like, for instance, BA went all the way to 235, then it didn't stay above that. You can see this is a 5-minute chart. It rejected breaking this level. Okay, so we know it's a key level. It pulled back to 233 and bounced off the same support 3 times. So this is a sign BA wants to go back up. Okay, so you want to trade the stock, especially we'll look at different stocks with different ATR. This will be very good for stocks with a big ATR, because that pullback and going back to the, so you are trading BA going back to this open high. Okay, so that's why I said this is about scalping. Sometimes you can have a stock breaking the open high and even going higher, or you can have some stock like BA, which usually has a hard time breaking those key levels. So you're trading it from where it has bounced. You always have to wait for confirmation, and you will see it tried the first time, the second time, the third time, then it showed you it wants to go back up. So the goal is you're trading that stock back to this level, okay? And we'll see some instances from yesterday where we had stocks bounce off, support, go back up to retest the previous high, and then we have some stocks that went up, rejected the previous high, and then you trading back the same stock with puts, you're driving it back down. Now for BA, if you see, so if you had picked BA, it pulled back. So you wait for this pullback and confirmation, then you ride it back up to this same level, or you have some stocks going higher. We'll see an example of that. And if it's not breaking, then you're riding it back down. Now, how does this become beneficial to us? You will go and look when this stock is pulling back. Some stocks have a big ATR that this pullback you can still trade with puts, and some you can say, I'll wait for this pullback and then ride it back up. So when you go and look at the contracts, and we'll go look at contracts, you are looking at the previous high. When that contract, so BA opened above the previous day high, went to 235, you're looking at the contract. What was the high of that contract? Let's say, for instance, when it went to 235, the contract went to 200. Now, when it pulls back, it's creating a discount for you. So you know, if this contract was 200, let's say it goes down to $80 just by this pullback, it makes the contracts cheaper and at a discount for you. So you know, if I'm getting in, I'm standing to make the same 200 or slightly below it. So you can already tell just by this move how much you're going to make when you enter this trade. So this was the previous high. If a contract goes back to the same level, you might stand making the same money it did when it opened to this high level. Okay, so that's what the thing will be looking at. You want a stock that you want it to retest the open high, especially for the stocks that open above the previous day high. Those are the ones you are timing for. Either they're going to pull back, and some stocks pulling back, they're good plays going down, and some stocks, they will have a shallow pullback. So you're not looking at puts, you want to be looking at calls to ride it back to retest this level. Now, if it's not breaking that level, especially for stocks with a big ATR, you're taking puts to back down. So when this contract went up, puts become cheap at a discount. So you have the same stock, you rode it up, the same stock, you're riding it back down. Okay, so that's for BA, an example. Now, if you look at Alta, okay, so this was on yesterday. So this was the previous high when Alta reported earnings. It went to 479. Okay, this was on Thursday. Then it consolidated almost the whole day. And then you want, when it breaks the previous day high, those are the stocks we want to trade, the ones that break the previous day high. Okay, so this is what happened. It broke the previous day high. If you're a quick scalper and you know the level you're trading, you can do this. But for me, my goal is to get these contracts at a discount. I don't want to chase or get in at this play, which is very quick. You want to wait for it to pull back. Now, if it's a stock with a big ATR, you can play the pullback. Now, we see it came down to the previous day high, then it went again to the previous day close. Now, if you look, this went from 486 to 472. So, of course, when this stock opens above the previous day high, puts are cheap. So you can either trade this or you can wait to ride it back up. So when you look at the contracts, if you're saying, okay, I don't want to trade puts, I want to wait. But now the problem with not looking at the pullback, you can find, and we look at other stocks, that they keep going down, because when a stock opens above a previous day high, it can be a sign of continuation or a sign of reversal. Okay, so sometimes you might neglect this pullback, and then you find this stock keeps dropping, going down. So it's always good to see, to know when to stay away from the pullback, or when, if it's a strong stock, this especially if you're looking at the ADX, the strength of the trend. If it is a good number, it's above 30, if it's above 40, then means this is a strong trend going up. And this is just a pullback. But now this pullback, some people can take advantage and trade the puts. It went from 486 all the way to 472, and that's 16 points. So 16 points for puts, a stock that was up here, and we look at the contracts and see dropping to 16 points. That's not a bad trade for a pullback. But if you don't want to gamble with this, you can wait. It didn't break the previous day close, so you're riding it back up. Now you look at your contracts, and this, like I said yesterday, you don't want to get out of the money. Please, just slightly out of the money, but don't go out and say, oh, I'm buying a now 550 call. This move can be just short-lived. We want to retest this level. So if this contract came down to 472, you want to ride it back to 486, you can take a 490, 495, or even a 500 call, but don't go way out of the money, because we want this move just to retest the open high. Okay, so it went from 472 all the way, and you can see the minute it retested this level, it consolidated there for a few minutes and then had a shallow pullback and then continued all the way to 487. So slightly breaking above the open high. So the advantage of this is, when this stock is pulling back, you're preparing yourself. You're already seeing the money you stand to make if this stock goes back to where it came from. Okay, so if we look at Alta, and we go and look at the contracts. Okay, so we look at Alta. And we look at different contracts and see. So yesterday, calls. So let's say we are looking, it went to 472. Let's start with 500 and see how it went. So you want to see when the market opened. Come on. So when the market opened, you want to know what was the high. So this was...
Got your lunch?
So this was yesterday when the market opened. So this was on Friday. Now you're looking even, you can go all the way back to the previous day, which was Friday when it went to 479. This contract went to 271. Then again, when you had that pullback, it came to 200. So you can anticipate how much money you can make. It went to 270. So this come Monday, when it went up, when the market opened and it went to 486, this contract went to 200. Okay. When it pulled back, this contract went from 200 all the way down to $47. So this automatically tells you this is going to be a good play. Let's say you are a person who buys 3 contracts. So let's say you're spending, if we round it up, $50 times 3, you're spending $150. Then you can anticipate if this contract goes back to 200, I stand a chance to make $600 if you're buying 3 contracts, okay? And if you're buying 5 contracts, so you minus your, so let's say you bought at 50, you stand to make 150 profit per contract. So if you have 3, you stand to make 450 as profit. If you bought, let's say 5, you spend 250, you multiply 150 times 5, you stand to make 750 per contract. Oh, sorry, for the 5 contracts. Now, if we look, you're anticipating this contract should go back to this level or slightly below it, okay? So the first time it went, it didn't hit that level, pulled back, but you're still in the money. Then it went all the way up to 196. So barely rejecting this level. But this is giving you an opportunity to anticipate the money you stand to make. You can either make, it can go sometimes to this same level, or it can go slightly lower. But just by looking at this after pullback, this is the discount you got from $200 to $47. Okay? So any stock that opens and it has broken the previous day high, you look at the high of that contract, then you wait for the pullback. Okay? Now, this helps you to plan for that trade. Some people would want to trade this pullback. So we can look at puts. So it went from 486 to 472. So let's look at puts and see let's start with the 475 puts. Okay. So when the market opened, this contract was, so it came all the way from 1,040 down to 238. Okay. So if you want to spend, if you say you want to play the pullback, this is a 475. We'll look at a different strike. It went from 235 up to 650. That pullback of 16 points. So you can still make money with that pullback. Okay, so this is a 475 put. We can look at a 470. Say you don't want to spend all that money. Okay, so this one went from 139 to 413. So that's why I was saying, don't neglect that pullback, because that pullback can still make you money if you're a person who is capable of scalping. You know, you're hitting the ground running. You're seeing it as rejected, going higher. You want to trade that pullback, because most of the time when the market opens, people are securing profits. Any person who had a swing from the previous day will be selling, and that's why we take advantage of that discount we get when people are selling and making this stock pullback. Okay, so this was not bad. You're getting in at around 140. It went to 415. So this is already like a $300 per contract move or profit that you would have made just by trading that pullback. Now, for big ATR stocks, please don't ignore those pullbacks because they can make you good money just by that pullback. Okay, so you make money. That's why I said you can do two scalps. The pullback, depending on the ATR. If you're picking a small with a small, a stock with a small ATR, you might not get the same move of a contract. But if it's a big ATR like Alta is, you can make money with that move, pullback. Then when it's done pulling back, you're getting in to ride it back up. Okay, so that's an example of Alta. Another example of a bearish stock that was bearish. Okay. So if you look from even from Thursday, we knew Meta was going down. Okay, so it was a stock that opens below the previous day low. You're looking at it at a bearish. You're expecting a bearish continuation, or it can pull back for a bullish pullback. Either you're getting puts for continuation, so now it has opened below the previous day low, you're getting puts. So if it's a stock, if you know the level you are anticipating this stock to go to, so if you're using SATI or you're using CPR levels, those are the ones you refer to for your exit. So on Thursday, we were anticipating Meta to go to 321. So you always have to have a target level. If it is opening below the previous day low, or it's opening above the previous day high, so that when it comes back to that level, when it breaks that level, you have your exit. So here, you wait. We've seen some stock that we try to pull back. So this didn't barely had a pullback. So you know you're getting a put because it opened below the previous day close. You will see some stock pulling back to that previous day low level and then continuing down. So this one you're trading puts, okay? And the whole day, it was just consolidating on this level. Then the next day, so this strategy is basically for day trading, you're scalping or you're day trading. You can use the same strategy if you want to swing, but we are not talking about swing today. Today is about scalping and day trading. So this come Friday, it opened above the previous day low. You want the strategy is to be a stock opening below the previous day low, or above the previous day high. Those are the stocks you're trading. Anything else, you're not looking at it. Okay, because you see it took time before it broke the previous day low, then it didn't give you the best moves afterward. Just slightly here. So you want that opens below the low, previous day low, or above the previous day high. Those ones give you better setups. Okay, so if you come to yesterday, it opened below the previous day low. Okay, so if you have your target levels, it will hit 313. If you must trade also in conjunction with target levels. So it hit 313, it consolidated for a while. Now the opportunity is to get calls to ride it back up. You're either riding it back up to the previous day low level. And you see it went, it didn't hit it, pulled back, and finally went back to that previous day level. So this is what I was saying. If that move is not happening 30 minutes after market open, you will catch this move, and then you can catch this power hour move, because some of the stocks you'll have the move happening mid-morning or lunch hour or power hour. But you're just basing the stocks you're picking to trade or scalp for that day on only the ones that open below the previous day low or open above the previous day high. Okay, let me look for another example. Okay. So this was yesterday. So it opened above the previous day high. Okay. So you're getting calls. This one didn't even pull back. It just kept, I had put this in the top watch yesterday. It just kept going. I know it's a small ATR. I'm trying to demonstrate this you can either do this for either small stocks, big ATR, or even small ATR. So this one opened above the previous day high and just kept going the whole day. Okay, so those are the two things. You're either trading, you're picking a stock that opened above the previous day high, you wait for the pullback, and then you ride it back to the open high, or the one opens below the previous day low, then it can either continue going down, so you're riding puts, or you're riding it for the pullback back up. So this one, I couldn't find the one I gave you guys. So this one is called previous day. When you go to indicators, I couldn't find the one I'd given you guys because I didn't make it favorite. It's this one for, is it the one? This one, the previous period levels with J. Rogers. Okay. Now, that's example of RH. So we've seen Alta. I don't know if these other stocks, what was happening yesterday. I haven't looked at all of them. Okay. So BBY post-year, it's been going up since it reported earnings. This is the same case on Friday. So it opened above the previous day high. And this is very good for, especially for stocks post-earnings. So if it's opening above the previous day high, you're riding it up. Now you see some of these stocks might continue up to the next day. Like here, this one kept on going up to Monday. So this one, it opened slightly below, so slightly below it opened above the previous day open, this level. And then it went to break the previous day high. And this stock kept going the whole day, shallow pullback. Then it continued all the way to Monday, yesterday. No, it's this one by J. Rogers. I couldn't find the one I'd given you guys, but I like this one. This one just gives the previous day. If you want even to go 2 days before, you can, because stocks go back to those 2 previous day levels. This one, previous period levels with J. Rogers. Okay. Okay. So, look at AVGO. AVGO has not been trending very well, except, so here it broke the previous day low. then consolidation. You can clearly see when the ones that are opening and they are not below, they take their time. They're either consolidating or not giving you that move. That's why we want those that are opening above or below. Let me see, I thought I'd written all the examples. Just a minute. Okay. Now you can set, I don't know if you can set an alert. You can set an alert for this indicator and then it alerts you. I'm not sure. Okay. So this one, spots, opened above the previous day high, of course we know. So you can either, you're trading the pullback. I know it didn't give us a very good move, but it was about 8 points. So you can see the stock will give you indication if it wants, it's not breaking that level. So for you, you're not concerned about it going up. You're waiting for that pullback. You're either trading puts for the pullback or you're riding it back up. So now this one, especially because it opened high to 201, it failed to break this level 3 times. So always wait for that confirmation. You will see that stock trying to break that level the first time, the second time, the third time it fails, then you know I'm getting puts for the pullback. Okay, you're riding it down or you're riding it back up. Now for spot, we didn't get a good move it going back to this level. If you're seeing it's creating a lower high, then it means you're riding it back down. Okay. So ITSI, it broke, went above it. That's why I said those first 30 minutes, because you want to see how the stocks behave. Either you'll find a stock opening immediately above the previous day high like spot, or you can see a stock take about 30 minutes to break the previous day high. That's why I say the first 30 minutes is where you're now going to look for plays. So this one is not a big ATR, but it came down from from 85 down to the previous day high. And this is the thing. You will see many stocks bouncing off this previous day high or going to the previous day close or open. So the levels are right here. Even if a stock keeps going down, you're trading puts, you're still holding to this, or it's going to reject and then you're riding it back up. So here, it went from this to this and back to this level. So you're looking at the contracts. When you look at the contracts, you want something that is taking you back to this high. So you're not chasing, you're waiting for the pullback and then you're riding that contract back up. Not sure. Okay, DLTR, not a good example, these small ATR stocks, but went up and opened above, but didn't do much. Now, you guys know I'm usually biased to big ATR stocks because they give you those perfect setups compared to the small ATRs. So you have to be picky when you're picking, when you're selecting which stock to trade. Let's look at MSTR. Okay. So it opened above, way above, pulled back, came back up. So this MSTR can be good to scalp, though it's very volatile. So from here, tried, failed to break here, failed to break here, failed to break, you're riding it back up to almost the same level or a lower high. If it rejects the previous high level, then you're riding it back down. Okay. Now, anytime a stock is also, if you want also to anticipate if you can swing that stock, because opening above the previous day high is a sign of either the stock wants to continue down, up, continuation, or a reversal. Now, if by the end of the day, like here, it consolidated, it opened above the high, went up, consolidated the whole day. And you guys know when a stock is doing this, a big move is coming, whether it's daily time frame, whether it's 5 minute or 15 minutes, anytime a stock is doing this, if you turn on your, you will see that it was squeezing. So anytime you're seeing this consolidation like this, and this stock opened above the previous day high, if it's staying and not breaking or even touching the previous day high level, anticipate this can be a continuation. Okay, it can be a continuation up, and that's what happened. It went up. Okay, so you can use the same analysis to know if this stock wants to continue up, especially if it doesn't go back to touch the previous day. Now, this is what I mean. The stock will squeeze, you'll see that move coming. Now, into, so here, it, what? No, not there. So into, Tosh, why are you saying into? So this is the previous day. So this is the previous day open, the previous day close, the previous day low. So it opened, it didn't go to the previous day high, and it didn't open below the previous day low, but it kept going down. So you can still use the same levels to ride a stock back up. So when it went to the previous day low, you ride it back to the previous day close or open or high. But the good plays are the ones that are opening above or below. Tosh. Okay. So this one opened above, rejecting, pull back, and then went up, came down. It's a small ATR, but I've been telling you guys to look at this stock because it can go all the way back to, it had come from, because of the level in the, so this level, 71, then it came all the way down to 21. So 50%, and also it can go back up, and it's a post-ER. So keep watch of it. Anyone with a good, another good example? Ugh. Sometimes I think my head will remember, but see. HD. So this one, if it's opening up and you're riding it up, let's say it opened, the first candle opened above it, then it came down, open to the close, the previous day high, you are riding it up. This is a quick scalp. So you must have a target level. And you see the whole day, it didn't break. So this one is consolidating, consolidated the whole day. You see it squeezing? So look at HD today. So if you're not seeing any move back to the previous day high as a pullback, this means this stock might want to continue up. So this is an indication of a continuation or a reversal. Let's say pullback in our case, because we have stocks that are trending up, they're pulling back. Now, if you see a stock is not even moving the entire day, so after this move, it shallow pullback, then it's squeezing the entire rest of the day. It was just squeezing. Then it means some move is coming. It's either going to come down to this 320 or it's going to continue up. Okay, Netflix. I think I had Netflix in my list. Thank you, Charity. I think I had Netflix and Microsoft. Okay. So Netflix, this is Monday, yesterday, it opened below the previous day low, okay? So these are the things you're looking, you're already planning in advance. You look at the previous day low, and this stock is opening below the previous day low. You might get some shallow pullback and then you continue riding it down, or you can just get a put if you have a target level. So we know Netflix, who knows the target level, the key level for support? If it keeps going down, what is our level? Anyone remembers? We stay bullish for a while, you guys forget about these support levels. What is the key level? Anyone knows? Anyone remembers? So if we go to Webull, let's see what happened with this stock. Okay, so Netflix. So puts. So let's look at let's start with 450 and see. So this was yesterday. So whoever took a swing for Netflix, since Netflix was in the 5K play last week, I don't know if anyone looked at it. Look at this. It was in our 5K play last week. This contract went from 61 all the way to 452. Okay. So the key level for Netflix, nobody's telling me. If it keeps going down, the key level you guys remember, 444. You remember when it was having a hard time breaking 444? Okay. So we have 444, 453. If it stays above 453, then it wants to go back up. If it breaks below 453, it's 444, 435. Now, this was in our 5K play last week. This contract went from 61. So this was Friday. It hit 147. So we want to look at, then we had this pullback. So let's look at yesterday, the 4th. Yeah, where is the 4th? Time frame is it showing? Yeah. Oh, it's here. There it is. So this was Friday when the market opened. So it went, you can wait for that pullback so that you're not chasing. You'll always see a pullback before it continues up. Okay, because it went up. For those people who had a swing, they had an opportunity to sell from 61 to 300, then it pulled back. So you'd be getting at 200 and it went all the way to 440. Okay, so even if you're buying one contract, you're making 200 over 200 profit just by trading a stock that opened below the previous day low. They're the best. If you start mixing, you want to find exactly the stock that opened below the previous day low or opened above the previous day high. They'll give you the best setup. Now, you must have a target level. You always have to have a target level. If it is opening below the low, where was it supposed to go to? So for Netflix, we know, of course, before it goes to 444, it has to break 450. So it rejected that and started going up. But this is the money you would have made. So if you had come here, let's say you're not chasing, you wait for the pullback. Okay. It went to 300. It pulled back to 200. So even by just this 205, you would have known this stock, I stand to get like 100. But if it keeps going down to my target level, then I can make more with it. Now, if you want to know how much, you can even draw the way I showed you guys how to do Fibonacci. You draw from the top, then the bottom, and you can see from 200, it went to this 300, then 368, and it was supposed to go to 470. So you already know it can either go, when you have these big gaps, always anticipate 50%. Don't just hold and say, I'm holding it will go to 470. It can go 50% of this. So if you take, let's say we round this up to 370, 470, that's 100. So if you add 50 here, 370 plus 50, you get 420. So always do that math. Always anticipate when this here, they can fill the gap. But when the gap becomes bigger, you can always anticipate it can do halfway, 50%, or go all the way to the next level. So it went to 367, then it went slightly halfway. So you would have anticipated your level to this contract. If it doesn't go to 470, I'm getting out at 420. And you'd have gotten out at the right time because it went to 440, pulled back, came down to 368, then went back to this. You had a second opportunity to exit and even a third. So this one, it went, came down, went again, then it went to 452. So you had all these opportunities to get out of your contract. Okay? So even if you're buying one contract, you still have made 200, but the goal for us is to make at least $100 per contract. Okay, just by trading stocks that are opening below the previous day low or above the previous day high. You're timing those pullbacks. Don't chase, because you want to know the high of that contract. After the pullback, you want to see, this is what I stand to make. So if it's breaking the high, you can draw this pullback. You take a Fibonacci tool at the top and the pullback level. These are your exits. Okay, so that's for Netflix. So Microsoft. And you're always on a lower time frame, please. Don't 3 minutes, 5 minutes. That's how you would see the pullback. If you're on 15 minutes, you might not see that pullback. So you want this. You are either having a target level. If your target level, you see this stock is very close to my target level, then just wait. So if you're using, let's say CPR, so using the weekly levels, always have something that is showing you where this stock is supposed to go, so that if it's rejecting, you know your trading calls back up. So this is the weekly levels. This stock, Microsoft has a narrow CPR. Okay, so it opened below the CPR. Then the support 2, so it was below support 1. If you're seeing the distance between support 2 and 1 and probably halfway, always anticipate halfway move. So if this is, so we'll round up 368, 358, that's 10 points. Anticipate this one can go all the way to 358, or it can go halfway, 50%. So from 368 minus 5 is 363. You're seeing it slightly broke it. So if you're seeing the distance, always please do the halfway, because it can reject this level or it can go all the way. If you're seeing it's having a hard time going down, and now plan for calls. Don't look at puts. Plan for calls. Whoever had the swing, they will be taking their profits here. And guys, it doesn't just start going up. It will warn you from this 750. I'm 2 hours behind. So this is 950. Just 20 minutes after market open, it bounced off this level, bounced off again, came again slightly, again and again. This took over an hour. because my market opened at 7:30 and this is 8:55. So it took over an hour just telling you, I want to go back up. I want to go back up. So you have the time to prepare for the trade. Now, riding it back up, the goal is to go back to the previous day low, 371. Of course, we'll have it rejecting the first time. So it went from your trading calls from 363, went to 369, slightly came back to this support level, then went up. So this is a scalp. So even if you're deciding to leave a runner, you're making money with the scalp. This is nothing to do with swing. It is the scalp. If you're leaving a runner, you can say I'm leaving a runner if this stock wants to go back to the previous day close, the previous day high. But this is basically for scalping and day trading. Here you're trading two moves, either the pullback or you're trading it back up to retest the open high, or to go back, if it's a bearish, to go back to the previous day low, the close, or the previous day high. So if we go look at Microsoft, okay, go to the options. So it was coming from, where was it coming from? This was yesterday. So this was not even a bad move. It was coming from, oh, this is not yesterday. So if you had gotten puts yesterday, we've been talking about stocks pulling back for the past 2 weeks. Oh, we are pulling back, we are pulling back, we are pulling back. This is how to know when to get those puts for the pullback. Day one, I said that you're waiting for it to break the previous lower high. On Thursday, the day it broke that previous day low, previous day higher low levels, this level here. Okay, naongea Kikuyu. That level, the day it's broken, it's telling you that's the day it wants to pull back. The next day is your entry. So from this is the first lower low. We know we are supposed to make 3 lower lows. Guys, please don't when we are anticipating this pullback and people are missing, I still see people having calls. It's really disappointing because we've spoken about this, we've anticipated, we've been counting days, we've been doing all these things. You're waiting for it to break this level. So this day, the first day, that was your first lower low. The second day, you're timing for a lower high, and that's your entry. Your entry, so you can hold up to 3 days. So this is the first lower low, the second lower low, the third lower low. Very easy trades. We've been anticipating this pullback for all this number of days. For a whole month, we've been trending up. And exactly December 1st, 30th, we broke this support. The next day, a lower high, that's your entry. So if we go to a 1 hour chart, so this is the day we hit a high, okay? We came down and broke this level on 30th. So this was an indication that we are going lower. We broke a key support level. After that, after this pullback, you're getting puts. You're holding here, second lower low, third lower low. Very easy plays. Okay, so we are looking at calls. It came from 362. So let's look at, let's say 370 call and see. Now let's look at puts. If you guys entered a put on last week, let's say at let's look at 375 and see how much it was. You guys, all this money, 136. That day when I said it broke, you wait for lower high, it came down, even if you're getting in here, or even you could have gotten in on that day, 136, you went up to 562, pulled back, still in the money, went all the way to 1,225. We've been talking, anticipating this pullback. You'd have come here and look, what was the previous high of this contract? 1,665. Then you're looking at a lower high level, 1,000, this one. So you can clearly know you're anticipating this contract will go back to 1,000. Get in. It went all the way to 1,225. We've been talking about the pullback, anticipating the pullback, talking about it every day. Which pullback did you trade? So that was the pullback if you're gotten in last week. Now, if you're looking at the puts, the calls for yesterday, because we are riding it back up. So it was at 362. So let's look at a 3. Don't go way out of the money. Let's look at a 3. Let's start with 370 and see. Okay. Ew. Look at this. So that time it was trying to break. You had opportunity to enter 126 here. It came back to the same 126. From 126, went all the way to 340. $126 to 340. Now, we know we anticipate 50%. So even if you're drawing your Fibonacci from this 750, so 50%, you see how that was almost exactly 50%. Came to 126. So this is 38.6. 50%. So slightly, almost touching 50%. By just eyeballing 750, 126, you want half of these. 750 divided by 2. What do you get? 323, sorry, what is the, what you get? 750 by 2? 375.
325. 375.
375. So you're anticipating from 350, you should be taking your profit almost here. Now, if you're seeing it's not breaking that, almost 350, it almost hit 350. So 350, you're taking your profit. Pulled back again, then went back to 355. So you're not exactly expecting that amount. You can slightly, reduce your expectation. So this is in the money. 121, you're making 200 out of it, plus. Now let's look at a slightly out. Let's say 375. Ooh. Look at this. $53 to 158. So if we do 50%, just draw all this time when it's pulling back. It's your time to prepare. You're doing all this preparation. You're finding out your exit and you're planning everything. So you see, this one didn't even go to 50%. But when you draw this, you can see your level was telling you can exit at 150. Let's say if this moves continues, because this move started way late. So you might not get it 50% because the move started like 2 hours mid-morning. This is 11. That's 11 my time. That's a one lunch hour move. Okay. So The goal is to make 100, and here you almost made it. This is if you bought 3 contracts, you're almost making that 300. If you're buying more, if you got 10 contracts, you have over $1,000 profit for the day. Okay, so the goal is to make at least, when you're doing this, you are the one who's picking the stocks that can give you a minimum $100 per contract, not per day, per contract. Now, depending on the number of contracts you're buying, I don't advise buying 1, at least 3 contracts, 5, 10, then you can multiply and anticipate how much money you can make. This, you're either, if it's a pullback, don't anticipate it will go all the way back on that same day. You're at least anticipating 50%. Now, it depends on the time this move started. If you're seeing the stocks that move started immediately 30 minutes after market open or an hour, you might get that 50%. But this one started way late, like 2 hours before. Almost 3 hours, from 7:30 to 11. Almost 4 hours. That's when we got the move. So if this time, if that stock is taking time to consolidate, make up its mind, you might not get that 50%, but you still get that $100 per contract. Any questions? So I will try. You can set up alerts for your key stocks. If they break the previous day low or the previous day high, you can set alerts for your stocks from your watch list, or just go look at which stocks were trending down yesterday or which stocks were trending up, and you're looking at, guys, there's no way you can make this money without doing the work. It takes a lot of work. You can either do that yesterday, which stocks were trending up, so you're anticipating they can either open up, or you're looking at pre-market stocks that are trending pre-market, top gainers, top losers. From that top gainers, just before the market open, you can look at stocks that broke yesterday's high. So those ones you're zeroing in. From that, you're picking your top 3 plays. Any stock pre-market that is above the previous day high or the previous day low. Some stocks do that the first 30 minutes. That's why I said I will alert for those stocks that break above the previous day high the first 30 minutes of after market open. But you can look for those stocks that are already trending up pre-market and have already broken yesterday's high or broken below yesterday's low. You are taking charge and looking for those stocks. They become your top key plays. Just from just analyzing those stocks that are top gainers pre-market or top losers pre-market. Any questions? If there are no questions, then I'll sign out. All the best, guys. Please use this. Now, people who are not making 5K per week, and you will see it's the same mistake people are doing that we talked about on Sunday, picking stocks that are not trending, and also having too many swings. Make the money fast with day trades or scalping for those who can. Even if you're at work, if you do this, you can actually find plays and you can make money in those. You've seen this one took like an hour or 2. You can use a trailing stop. You can take some profit, leave runners with a trailing stop, or you can even set a sell limit. If you come here, you get the Fibonacci levels. You can say, okay, I only want to make 100 per contract. Set your sell limit. It will hit that level, then take your money. But if you are only doing and focusing on swings and all your swings are red because you're trading stocks that are not trending. So even when you're looking for the top 3, please look for stocks that are the ADX is above 30, please. Okay. But I'll try my best to alert stocks. I might not filter out which ones. I'll just push them because sometimes you might be biased to only big ATR, and then you have a stock is a small ATR like NCLH just going up the whole day yesterday. So these are very easy plays, and the goal is to make 100. I want people now to focus on scalping to make that money during the day. If you're swinging, you're only using profits. But if you're hoping to make money 5K with only your swings, that might not be possible. Because if you're picking the wrong trades, you're in the wrong trend, you will not make money. So I want all of us this week, and we see how this goes. We are focusing on these stocks that are above previous day high or below previous day low. Okay, where is Dawn? Sign us off, please.
Let's make this money.
Yay, you sound better today.
Thank you.
All right, guys. Thank you.
All right. Bye-bye.
Bye-bye.